Good afternoon, everyone. My name is Manuelita Cody. I am the president of the North American Chilean Chamber of Commerce. And on behalf of the directors and the members of the chamber, we thank you for joining us this afternoon. That the audience of this would be possible. Of course, we want to thank our speakers for their time and their availability to talk to us on such an important subject and with such a great perspective. I will have the pleasure to introduce our moderator today, who is also a director of the chamber, Jorge Aguiló, who is a partner at Compass Group and country head of Compass operation in the U.S. He is responsible for the international development of Compass Latin America, asset and I'm just going to stop for a second. Everyone who has their microphone on, if you could turn it off, we give the speaker and everyone a chance to hear. In his previous role, he oversaw Compass's Global Solutions Unit, focusing on global asset allocation, selection of international managers, and structured product development. Before moving to New York in 2005, Mr. Aguiló was responsible for product development at Compass Group in Chile. Prior to joining the firm in 2002, he worked for 3 years in project evaluation and management in the construction industry. Mr. Aguiló holds a civil engineering from Universidad Católica de Chile and an MBA from Instituto de Empresa Business School in Madrid, Spain. Jorge, it's a pleasure to introduce you and to welcome you, and you have the floor.
Thanks very much, Manuelita, for that kind introduction, and thanks very much to the North American Chilean Chamber of Commerce for inviting us and for organizing this webinar to discuss this past, present, and future of the wealth management industry. Good afternoon to everyone joining us. I hope that everyone is safe and healthy and doing well. I'm here from my basement, so apologies I cannot put a background there, but I'm in the basement in my house in New York. I'm joined by Patricio Eskenazi, who better to share some of the insights from within the industry. He has extensive experience in finance, public sector, academia, and the press. Currently, Pato is the CEO of MCC-Itaú, Monita Cruzat. Before that, he was a CIO of Banco Penta from 2010 to 2016, and previously he worked as a portfolio manager for a local family office in Chile. He has also worked for the Pension Fund Superintendence from 2000 to 2004. If you can, I'm really sorry, if everyone can mute themselves so that there's no echo. Thanks. He's a radio host at Más Que Números radio program at Radio Infinita and advisor of the economics department at the Universidad de Chile. And he's a board member at the University of Chicago Alumni Club in Chile and an avid, and almost pro golf player. Patricio is a graduate of the Universidad de Chile with a degree in business administration, specializing in economics. He also has a master's in finance from the same school. and a master's in public policy from the University of Chicago. So, the idea is to try to keep this as interactive as possible, and we hope everyone has many questions. If you have any questions, I think you can post them in the chat or in the Q&A in your screens, and we will try to address all of them in order. Well, Pato, let's start this. I think it would be great if you can share with us. I know you prepared a presentation. How you've seen the evolution of this industry.
Thank you, Jorge. Thank you, Manolita, and thank you, the North American Chilean Chamber of Commerce, for this opportunity. A pleasure for me. So I'm going to spend like 30 minutes, 40 minutes at the most, trying to highlight the main point for the past, present, and future of the wealth management industry. And then the idea is to try to interact a little bit and to make a conversation how we see the future, because the past is already known, but the future, of course, unknown. So I should start defining what a wealth management industry talks about. Or what is it? Even though probably you know about investment or even banks or channels, the wealth management industry is the meeting point within investments and the high net worth individuals and ultra high net worth individuals where they meet. That's the wealth management industry. So on the product side, we have like three main products. So banks, which mainly for this talk, we're gonna talk about time deposits mostly, brokerage companies or stockbroker firms, where you can trade, buy, and sell stocks, and asset management that typically manage funds, either mutual funds or private funds. So the wealth management that I will talk about focuses on ultra high net worth and high net worth. So individuals, that's important, not institutionals, not corporate. Okay. Talking about the past, I'm not gonna be talking about the 16th century. I'm just gonna be talking about the 90s, so 30 years ago, maybe some parts of the 80s, but 30, 40 years ago, not so far away. And if you remember, we didn't have internet. So everything we wanted to do related to financial market should be done by phone calls. So we had to phone call someone in the US and say, hey, I would like to buy some, I would say, some Apple stocks, but Apple, I think, didn't trade. So probably some Exxon stocks. So you place the order in the morning, and next day you're gonna realize whether your order was executed or not and at what price. So that was in the 90s. Also, less developed capital market for the Chilean. Well, it's true for any country, but talking about Chile, this less development capital market was something very important for the lack of development in those days, in those years. So, for instance, you had to place an order with a stockbroker there, and similar to US, next day you're gonna realize if your order was filled. But many times investors on those days complained that the orders, when they were buying, typically they bought at the highest intraday price, and when they sold at the lowest intraday price. And that sometimes, maybe most of the times, was true because there was no regulation in terms of how to allocate those orders. So with that lack of trust, of course, only few investors were present in that market, and the development didn't come during those times. Also, another fact is that the interest rate, either in Chile or the US, probably anywhere in the world, were really high, or at least much more higher than today. So if you remember, Volcker in the 80s, in the 83, I guess, took the interest rate to 14, 15%. But the picture there is showing from the 80s to today. So in the 80s and 90s, interest rate in the US, this is for the American market, was around 7, 8, 9%, depending on the year, with a clear trend, downward trend. So much higher. It's not. It's more important to think that the interest rate were really high. So if you can invest at 9% on a risk-free instrument, why should you be trying to get, a stock in a volatile and not well-known stock market? Doesn't make sense, and it didn't. That's why it wasn't a huge development on those days. Lastly, there was secrecy, and there were tax paradises, and Switzerland was the better known tax paradise for those days. But most importantly is that most of that money was probably not tax compliant, which means that the banks don't know whether that money already paid taxes, if it was coming from legal activities. It wasn't an issue on those days. So those were four main factors in those days. Also, in the onshore market, meaning Chilean market on those days, the stockbrokers, the companies were really different than today. So I don't remember banks owning those companies like broker dealers. There were only old families, rich families owning broker dealers on those days. Why it is important? Because the result of that was that that market in Chile was really, really conservative. I remember I took a training course at the Bolsa de Comercio de Santiago, the main stock market in Chile, in 1994. And in that day, only men were allowed to take the training course. So it's only 25 years ago. It's not that far away, and it was explicit: only men allowed. So a very different market, very different firms, very different participant, and also an important player in this industry, of course, is the AFP, which is Pension Fund Administrators, with very tight limits for offshore investments. So if you look at the picture there, before the 2000s, even though the pension fund administrators used to have some limits for offshore investments, they pretty much didn't use it because it didn't make sense. The same as in the US, if the interest rate in Chile were like inflation plus 10% a year or so, why should you try to diversify and try to find different investment alternatives? It doesn't make sense, and it didn't in that time. So that's pretty much the past. So summarizing: no internet, less development in the capital market, interest rate higher, tax paradises and secrecy, different kind of brokerage firms, and no interest for pension fund administrators to go offshore, means lack of information, lack of regulation, lot of trust in bankers, which is important, high differentiation, and rumors. Like every stockbroker or brokerage firms used to have rumors. So if you were a friend of them, you could get to know that this company was going to sell something or going to buy something that may have a huge impact on the price of that company in the market. I mean, but if you were not friends, you didn't get that information. That was the market for the onshore in the 90s and the beginning of the 2000s. At the bottom line, I would say that regardless of all these characteristics, the industry was sounded on the financial side, was able to charge high fees, and it was a sound business. Today, which means from 2000 to today, 2021, in the onshore market, there were some reforms. Most of the impact I'm showing in that picture comes from first and second capital market reform. Some of them también on the updates on the LUF, which is a law that updated the regulation for private and public funds and mutual funds as well. So you can see there that from the 2000s, the value traded on a yearly basis was 4 times than before. Why? Because the most important part of this capital market reform was the 107, which means that capital gains for the stock market didn't pay and don't pay taxes. So tax-free for the capital gains if the company was bought and sold in the capital market. Big impact on that regulation. Another things also have been happening during this last 20 years. So institutional investors, mainly insurance companies and pension fund administrators, became large players, not only for the onshore market, but also for the offshore markets. Today, pension fund administrators manage $200 billion, which is 70% of the GDP in Chile. It is a lot. And that means that foreign distributors wanted to come to Chile and try to sell to those institutional investors. So an increase in demand also means an increase in supply in that case. And family offices also grew and became more sophisticated. They started to manage more assets. And also the multifamily offices start operating in Chile at the beginning of the 2000s, which means that they are trying to put together different clients, so to put together demand and try to be able to invest the similar or in the same ways and vehicles as the institutional investors do. And also new players. New players means that with this development, there are niche players de nicho, that are able to offer different products, different segments. They are able to tackle different investors. In the offshore market, there were also some important things going on. So the ETFs were launched I think in the 2003, maybe a little bit before. But if you see the evolution of the assets under management related to ETFs, it's a big effect on the last 15 years. Before that, the investment world was different. So we only had mutual fund possibilities with your bank and stocks to buy. Of course, fixed income directly, but the ETFs was a kind of a revolution, I would say, that also came here to change the industry. On the offshore market as well, there appear some platforms to trade cheap. I'm mentioning some: Ameritrade, Telstra, Robinhood during these days, XP, and many more. So the point here is that some client investors start asking their bankers, why should they pay 1% for trading, for executing, some stocks, if they can pay $9 or $10? That's the price they used to charge on those days, like in the 2006, 2010. So even though it's not really comparable, it's a little bit different to trade with these platforms than to place your order with a banker and a bank. It's not that different. So the point was made, and of course it put some pressure on prices and that prices, okay, fees maybe. Also, information became free for everyone at any time. And this is a very important issue for the industry because, as I mentioned before, in the past we didn't have internet, so information wasn't free, was like expensive. And I would make the point that the development of internet make this information available. And as you know, information is a public good. You when you have it, it's yours. But when you tell anything to anybody, you cannot control that this information will be kept on secret. So anybody from there can use the information you share with them. So it has characteristic of a public good, which means that it's really difficult to charge for this information. Why this industry wants to charge? Because it used to have the execution fees, but since the cheap platforms appear, it's not really easy to charge for executing, an order, a trade. Also, it has the opportunity to charge for like an advisory fee. So, these banks in the wealth management industry have very big research department. They spend a lot of money and time and effort, developing ideas and reports and research, and they want to charge for that. They would like to charge, but it's complicated because of this public good characteristic of the information. And another thing that happened during these last 20 years is the deregulation for foreigners to trade onshore, I would say almost everywhere. If you remember those days in the past, we used to have like capital controls in all the or many of the developing countries, so it wasn't common to bring money from offshore investments from abroad. During these last 20 years, many things changed. And now, if you want, you can buy some China stocks, the A shares. You can always buy, the other share for foreigners, but now you can buy some A shares. And at the end of the 90s, I remember the Gazprom, a huge, big company, Russian company in the oil industry, used to have local stocks in Russia and ADRs, like the same stocks trading in the US. The difference was like 20 times. So you had to pay 20 times more for a company trading for the same company trading in the US than what you had to pay for the company trading in Russia. Why? Because there was a regulation that wanted to incentivize Russians to buy these companies in the local market, and at the same time disincentivize foreigners to buy this strategic company. Well, 20 times. That was the difference, and this disappeared during these last 20 years. So summarizing today's market, the information is free right now. We have much more regulation. We have institutional investors playing a huge role here, increasing offering by offshore firms, sophistication, a lot of sophistication, product development, and that means pressure on margins, pressure on prices. So for this industry, these last 20 years have been tough because it used to have a close relationship with clients, control on the information, control on the access on the information as well, and was charging like good or high fees in the 80s and 90s. Not anymore. From the 2000 and on, the picture changed a lot. So now I would like to talk a little bit about the future, maybe the trends. probably in the next 5 minutes, I will develop the ideas, and we will have some time to discuss what you think about. But one of the issues I think will be present here will be ESG. ESG is an acronym that means environmental, social, and governance. So these are three categories that are really important to be conscious about, and the new generations are, I would say, much more conscious about these three characteristics: environmental, social, and governance. So they are more willing to buy stocks on companies that are fulfilling these three letters, the ESG. And also, it's important to think that the ESG investments you don't need to give up returns to get ESG investments. It's probably the other way around. So the more conscious the people are, the more they want to buy these kind of companies. And when you buy these companies, you put, of course, some pressure on the prices, so you get like better returns. And also in the long term, only the companies that are compliance with this ESG will have probably a future. So I don't think it's possible to think the future with companies not complying with environmental, with social, and with governance policies. So probably it's better idea to invest in the ESG world than in the non-GSG world. So I think this acronyms will be here for a long time and would be a good investment. Second, I think the low interest rate environment we are living in will be here for a long, long time. Maybe forever, maybe not. It's, of course, opinable, discussable. But if you think that Japan has been here for 30 years, probably from mid-90s, with negative or very low rates, interest rates, the European Union as well, so started to decrease and to cut rates, and now they have most of their countries have a negative interest rate, and the US is not there, but it's really low. And even, well, Chile used to have like negative interest rates, and today it has some negative real rates. And Brazil used to have the Selic, the Fed fund rate for Brazil at 14% in 2016, and today the Selic is at 2%. So probably the low interest rate environment will be here for a couple of decades more, which has some implications. One of the implication, in my opinion, is an increase of sophistication. What's that? Well, investors are everywhere, every time, looking for performance, for yield. So if you are not able to find good yields in the fixed income market, you're gonna look at the equity market. And most of the time, interest rates are really low, equities are quite expensive or really high, at high valuations. So that creates an incentive to bring real assets to the financial market. Why? Well, you have seen the Fed balance increase a lot. I mean, like 4 times or 5 times since the 2008 crisis. The Fed balance used to have like 2 trillion, and now it has like 8 trillion. So it's a lot, like 4 times the increase. And this money, most of that money, is kept at the financial market, so it doesn't go like to the capital, to the good market. If you see some prices like housing and these kind of things may have risen, but not that much. So I think in the future we're gonna keep looking securitization. We're gonna keep observing securitization. What's that? Putting real assets into the financial market. That's a trend I would expect to be here for a long time. Also, the fintechs, of course. Fintechs have developed a lot during the last 5 years, maybe 10 at the most. And they are trying to tackle one particular cost for this industry, which is the cost of managing one account. So, as I mentioned before, the industry was trying to charge in two different ways: execution fees and advisory fees. Well, those fees are intended to pay for managing an account, and it's expensive to manage an account. What do I mean with managing an account? Well, when you have an account with an investment bank and you want to trade, some stocks and to buy some funds and these kind of things, the bank has to fulfill with a lot of regulation, KYC, which means know your client. You have to have many information from the company you are investing in, so the bylaws, your information. When you are Chilean and you are investing in the US, you have to fill a W-8, which it's a document not to pay taxes in the US, but in Chile, and many different documents. And managing that account year by year cost a lot. So that's a problem for the middle income investors, because the fees they would have to pay for having one of these accounts, it's really high in percentage points. So that's the fourth trend I would expect, and we have some challenges for this point. So, as I mentioned at the very beginning, the wealth management industry talks about high net worth individuals and very ultra high net worth individuals. So, what about middle income, middle class? It's very desirable to have them as investors in this industry, of course. So we want more players, more competition. We want more demand. Of course, we want them. But before that, we need to increase the financial education. Unfortunately, for the Chilean case, the financial education is quite poor. As you can see in that picture, Chile is at the bottom of the ranking. When PISA in the 2015 asked one financial alphabetization, it's another word in English, sorry, but literacy, and Chile is at the bottom, Peru and Brazil as well. So the developing countries are quite bad in financial education. When we are able to educate not only the middle class, but all the potential investors, we will have to develop a saving culture. And unfortunately, again, Chile is bad position for that, because when you look at the debt that a typical Chilean family has, it represents, like, at the right picture, you can see like 5 times the monthly wage. That's a typical debt of a Chilean family. And when you look at the financial payment they have to do to make every month, it's like 25% of the monthly salary just on paying interest. That's a lot. So you cannot spend 1/4 of your monthly wages just paying debt. That's not sustainable. So we have a challenge there, and we have a challenge because of ethics. We also have a challenge because for this industry, it's important to have more savings, because this industry manages savings, not debt. So we need to work on that. And lastly, it's also really important to deliver. What do I mean with that? I mean that if we are able to achieve point 1 and 2, financial education and saving culture, and we have a lot of investors coming to the market, after they invest, they need to get a good return. So it's not enough if we have like companies charging very high fees that are taking most of the returns that the financial market is offering. That's not sustainable. And that's a reality not only in Chile, but in many countries. So the price, the fees, we are charging or able to charge to the middle income investors, it's too high to be profitable for them. So in that chart, I would like to show the difference in a 30-year investments, the difference between getting a 7% per year compared with getting a 2% a year. Why those numbers? Because I'm assuming that an investor, a high net worth investor, is getting 7% after fees. Okay, a middle income investor would pay 5% more in fees than a ultra high investors pays. And that difference from 7 to 2 creates a huge difference after 30 years. And the worst point is that it diverges. In the long term, the guy that is getting only 2% is 4 times less wealthy than the guy that is getting 7%. So here, I think every industry has to be sustainable, this industry as well. And a very personal opinion regarding, I'm not sure if you are all familiar with the pension fund administrators discussion and the system and everything that's going on in Chile. But briefly, I would say that pension fund administrators did a great job from 1981 to today, 40 years, great job managing funds. However, when you run a survey in Chile, like no more than 20% want them to keep doing what they did. 80% want them to be eliminated on this competence. And it's probably going to be the case for the pension fund administrators in Chile. Why? My personal opinion here, they didn't understand correctly what was the role. They thought they were managing assets. People were expecting from them to manage and provide good pensions. So people were expecting the final results, not the process. And for this industry, it's probably the same. That's not enough to show in a fact sheet that this fund has all these characteristics and charge whatever, 5%, 6%, whatever. That's not enough. If we're able to bring middle class investors to this market, we need from them to be financially educated. We need from them to save much more than today, and we need to provide for the whole new investors. We need to provide for them good returns, good investors. We need to deliver. Last, when I think about the future of this industry, even though I know I share a bad trend, like everything is more difficult, it's more difficult to charge, everything is more difficult than in the past. That's true, but bottom line, I think this industry will be more important than ever. And there are 4 arguments like innovation, revenue hedge. There are some more arguments, but the most important one, it's probably counterintuitive. It's the frequent contact with clients. So the more robots we are interacting with, I think the more valuable will be the human contact. So if you are ordering pizza and you're paying your bills and you're doing everything with a robot on your day-by-day basis, I think you will value when a human being, is on the other side of the phone or the other side of the meeting and say, hello, I know you, and I know what you want, and this human touch. So bottom line, even though we don't know the future and what's going on, I think this industry will be here for a long, long time. Well, 35 minutes. That's all what I wanted to share. I'm more than happy to discuss, to hear doubts or to hear your views related to the future of this industry. Thank you.
Thanks, Pato. I think that was a great presentation, really insightful. You covered, I think, many topics about it. We have some questions here. I think carrying on with, in terms of, maybe can you share your views in what type of investment product trends are you seeing, and are these trends, pouring down to less sophisticated investors?
Yeah, good question. Well, I can develop a little bit what I mentioned in the presentation, but I think one of the trends is securitization. So any assets in the real economy that has flows, cash flows, is good for being securitized. So in the US, which is a much more developed market on this, assets that have been securitized are student loans, credit card loans, car loans, all the loans, which means cash flows go from the real economy to a fund or any kind of investment vehicle that investors can buy at the market, in the market. That's a trend that will increase sophistication, Jorge, on what it's inside, but the vehicle will be the same. So there is a huge excess of demand on the monetary market. So all the money that the central banks throw to the economies goes to the real. A small part goes to the real economy, and the biggest part go to the financial market. So it's a kind of an imbalance there. So returns will be on the securitized vehicles, and niche asset managers will keep growing. That's my guess, Jorge, because of the same. The capabilities are not equally distributed. So smaller firms have more capabilities to develop this kind of niche investment vehicles, more sophisticated. So another thing I think I'm gonna happen in the future is the atomization of the managers, the asset managers. For the plain vanilla alternatives, big players. For any other more sophisticated kind of investment, there is room for smaller, more sophisticated managers, specialized managers, right?
And like, we probably have people that wanna understand better the industry. And what resources would you recommend for someone who seeks to advice on how to better manage their savings? I mean, there's tons out there, but is there anything that you would recommend? People or new entrants to the market, new savers?
Yeah, well, this industry, Jorge, also has another characteristic that I didn't mention, and it's important for answering this question. If you think about a medical doctor, when you need a doctor, you go and go to her consulta office, right. and she will provide practice, and she will provide advice, right? And she will sometimes, and in Chile happens, they are linked to some exams, some clinics. So it's a difficult business to be, because ethics is really, really important. Why I'm saying this, Jorge? Because if you know nothing about the problem that you are asking to the doctor, most of the medical doctors will answer and you will be happy for a long time. But only with some of them, with the good ones, you will receive the advisory that was right. Maybe with some of them you can get the wrong advisory, but you will not notice that in the next years. And when you notice that, it's late. Well, similar in this industry, you can go to everywhere and ask advice, and some of the advisors will sound like great advisors. They will tell you the story that they know everything about markets, they are really good, that they have beaten the market for over the last 10 years, and so on and so forth. Unfortunately, some of them, some of these things are not true. And if you are not an expert on that, you have no way to realize who is lying and who is saying the truth. The only piece of advice that I can give you, Jorge, for any new investors that are trying to get into this market, go with the most trusted institution. Trust is important, and that's why size matters in this industry, because of trust. That would be the most important piece of advice I would give to a newcomer.
And it goes, I think, with your last comment, that at the end, of course, we're seeing more and more fintechs coming out. There's a democratization of this service, right? Or a retailization of the service. But at the end, it all comes to trust, right? Especially, who are you trusting to give your money away to help you, right? And the human touch there is always relevant. It's important.
Absolutely. Go ahead.
I have here some questions from the audience, additional ones. We have seen in the recent years that the family office in Chile are sending a higher percentage of their wealth to offshore jurisdictions. Which ones do you think would be the most important? And now that Cayman Islands are no longer on the list of the FATF, what destination do you think would be suitable for this offshore hub?
Well, it's funny. It's a great question. Thank you for that. And it's funny, but the better place to, well, I don't want to give an opinion here who is the best country to go. It right. Depends on many things. But the country I have here the most as a best place to send money offshore in the last years is the US. Is the US. The US, not only because of trust, of course, is a huge component of the decision, but also it's simpler, and it has some waivers that other countries don't, that makes the US a great place to be. Well, some guys are, this is, I don't want to talk about taxation in detail, but it's true that family office and high net worth individuals have sent money abroad in the last years. In particular, starting in October 2019, there was a estallido social, we call it, like social. I don't know how to say this in English. Unrest. Thank you, Jorge. And it's true, but the difference. It's tricky, but I'm not sure if the investors are investing more abroad, but they are investing more in dollars, which is different. So
Right.
one thing is to think about the currency you want exposure to, Chilean pesos or US dollars. So that's one issue. The other one is where do you want to have your money? So what jurisdiction you trust the most? And that's a different question. You can have dollars investments in Chile and the US, but when you are sending your money to the US, means something a little bit more worrisome. It's not only that this investor want to invest in dollars, but also that for some reasons they don't want the Chilean jurisdiction, but they prefer to send it abroad. So something absolutely important to keep an eye on.
And have you seen that in general? A bit more of that, right?
Yes, I have seen most of the people wanted to, well, at the end of 2019, the FX rate for Chile went up from 700 to 850, so like 20% in few weeks. It was something we weren't expecting. So some guys said, okay, I want investments in dollars. I don't know if the CLP, the Chilean peso, will be worth in 50 years. So there were some of these investors. Other said that they wanted to have more money offshore, and they start asking questions we weren't used to, like, hey, you work with a bank in the US. Can I go to the US and take my money out with my passport? Yeah, of course, it's your money. Can you put it by written? Okay, that's different question, So we had some of these issues at the end of 2019, and I hope it ends. I haven't heard more on that during last month.
We have a really good question here, I think. You mentioned that, and I think I can also add a bit on this. You mentioned that women were not allowed to trade not that long ago, right? What is the role of the women today in this industry, and how do you see for the future? How are women as investors?
Good question. Well, we should, I guess we should think about why a woman would provide different results than men, right? And there are some studies, funny studies. Funny, it's a way to say it, but important studies as well. What I have read is that when you have investment teams with at least one woman, the performance of the assets they manage are better. And probably it's related to the different views that a broader team has. So when you have diversity in a team, you get a richer discussion. You are probably more tolerant, and with these kind of inputs, you probably get better outputs, better investments idea, better results. So it used to be true for Chile, but it wasn't allowed. Now we're still lacking women in the industry, probably like in some roles we have like 50-50, we're split 50-50 women men, but on the management side and on the investment side, few women yet. So would be great to have some ways to promote the participation of women on the financial industry. Would be good for the industry.
No, I totally agree with you on that. I think also actually on our firm, women partners own like 22% of the capital, and for us it's very important. I think it adds tremendous diversity. We hope that continues to rise. And women manage about 35% of our assets and at Compass. And And the typical industry, I think, and the typical in the asset management industry is about 5 to 10% is run by women. I think that will continue to increase clearly. Another question here. Patricio, what's your view on crypto activities as an investment alternative in the near future? That's a tough one.
Tough questions, Jorge. Huh?
That's a crowd. That's the participants. Good questions.
You're being picky.
No, I'm just.
Well, I think I don't understand cryptos, so I don't believe they're gonna be a currency as we know currencies in the future. Having said that, when the financial world invests in something, invests in many things. It just has to be a good. It doesn't have to be, a currency. And what I'm start thinking about, but it's really verde, and I haven't developed much this thought. If cryptos become an asset, which as the definition of an asset is something that is able to provide cash flows in the future. Okay, so there are not cash flows, but you know what I mean. An asset, an investable
value.
Value, yeah. The demand on the financial sector I was mentioning before should be more than enough to take those prices to the moon, even higher. And could be weird because it's something that doesn't provide cash flows. There are no interest rate. That's one of the main difference with every other currency. Currencies provide interest rate. Cryptos don't provide interest rate. But so I wouldn't compare cryptos with currencies. Maybe another way to think about cryptos is like gold. So gold is an asset that we think it's an asset because it's able to keep the value, but doesn't provide interest rate or cash flows in the future either. So I don't understand why we are talking about cryptos in these days, but I don't trust, I don't believe, I will not invest in cryptos. But if other guys think it's an asset, could invest in that asset and could take the price really, really high. Sorry for the lack of clarity on this answer, but I don't understand this kind of asset.
I agree with you. I share many of your thoughts, and I think it's something that clearly yields to a lot of speculation because of that. But at the end, people say, right, something is worth what other people are willing to pay for. So maybe we're approaching the hour. It's 2 p.m. Eastern here, 4 p.m. in Chile. I don't see more questions, so I think we'll stop it at here, Manuelita. I don't know if you want to close it.
Sure.
And I just wanted to thank Patricio for his preparation and for his presentation. I think it was really good.
Thank you so much. Can you hear me well?
Yes.
Wonderful. Thank you, Patricio. Thank you for an amazing presentation. Very insightful. I know I learned a lot. It was eye-opening in some respects. And I think, the industry has gone through some democratization, I think, and it's a lot more democratic. It's also, I think, riskier and more sophisticated. So, as you said, it's a important industry that we're all going to become more involved with. So we hope to have you in the near future. Continue with presentations so that we can talk about new developments and changes in the industry. But I want to thank everyone for being here. We had a good crowd that remained with us till the end of the presentation, and that is an indication of how engaging it all was. So I thank you all for participating, for being here. We will have a video available for whoever is interested. Thank you, Patricio, again. Thank you, Jorge. And I hope everyone has a great afternoon. Thank you so much.
My pleasure.
Thanks. Take care.
Bye.
Thanks. Bye-bye.
Thank you.